Welcome to the latest Motley Fool scoreboard. I'm Anand Chakavalu, and we've got longtime fools Jason Hall and Rick Menares giving a 1 to 10 rating to the company that wants to be the next Red Bull or Monster. It's Celsius Holdings, ticker symbol CELH. Talk about the business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Rick's at a 6. Jason, you're at a 5.
Yeah, this is a tough space. And as much as Celsius is charged into that top 3 in energy drinks in the US, it's already having to buy its way to more growth. And I don't love that. I also am less convinced that that PepsiCo distribution deal will prove analogous to Monster's deal with Coke about a decade ago.
I went with a 6. Sparkling goes flat pretty quick sometimes. Celsius has gone from businesses that delivered 3 straight years of revenue more than doubling, ending in 2023, to a company with the last three quarters of year-over-year revenue declines right now. Celsius has lost market share over the past year, but it's still a lot higher than it was before. In the last 3 years, it's gone from 4.6% of the U.S. energy drink market to 20.9%. The two leading players, Red Bull and Monster, have declined over those 3 years. Throw in the Alani Nu acquisition that closed in April on a pro forma basis, and the combined brands have gone from 6.3% of the market to a record 16.2%. Celsius is a feast of extremes, but I think the truth lies somewhere in the middle, 6.
For management, a 10 is Warren Buffett. A 1 is Homer Simpson. Rick's at a 7. Jason, you're at a 6.
Yeah, and honestly, you go back a quarter or so, and I would have been lower. I think they've made some strides, but you go back to when we saw that first decline, management was obviously caught extremely flat-footed when the orders flowing through PepsiCo slowed down. On the earnings call, it didn't sound like they knew what the heck was going on. And my concern now with the acquisition of Alani Nu is that it was a quick reaction to slowing growth for the Celsius brand. And this isn't a management team that has a history of being savvy acquirers. They paid 3x revenue for Alani Nu. Yes, it's fast growing, but this is a beverage brand. So that just raises some real red flags for me.
I'm with a 7. So CEO John Fieldly, he's been CEO for 7 years. And in that time, annual revenue has gone from 36.2 million to 1.4 billion, a 37-fold increase in that time. He brokered both a game-changing distribution deal with PepsiCo 3 years ago, as well as the Alani Nu deal that is single-handedly propping up Celsius stock in 2025. Recency bias suggests that I should be down on Fieldly, with sales declining the past couple of quarters, but even 85% of the employees on Glassdoor approve of the job he's doing. I'm going with a 7, and if the Alani Nu deal keeps the shares moving forward and fundamentals moving higher, I'd be on cloud 9. So that would be my rating then, but for now, a 7.
For financials, a 10 is a fortress. A 1 is yikes. Rick's at a 7. Once again, Jason's a tick lower at a 6.
A year ago, I probably would have been a 7 or 8 because of the balance sheet and the high margin nature of the business and how it's constructed. But you look at where things are today, and the Alani Nu deal added $900 million in debt to a balance sheet that had 0 before, and it also reduced the cash on the balance sheet by about a third. It went from a very strong balance sheet to now one that's really more middling. And the margin profile, again, that's been solid, but I do have some concern that things may get messy as it integrates Alani Nu, which we're going to see over the next couple of quarters.
Yeah, I went with a 7. So PepsiCo, they acquired an 8.5% preferred share stake in Celsius 3 years ago when it became the exclusive U.S. distributor. Backed that out, and Celsius had a clean, cash-rich balance sheet before the Alani deal closed in April. Growth has been dealt an Uno reverse card, but things will change in the current quarter with Alani Nu now on the books. Revenue growth, non-organic, of course, should move at least 50% higher for the next 4 quarters. Celsius, unlike Jason, I think Celsius got a great deal here, accretive to its results. At a net cost of $1.65 billion, it paid what's roughly 17% of its market cap for growing its business that will increase by revenue by more than a third and should soon be accretive to earnings. So I know the last few quarters left investors with a bad aftertaste, but this is a company that rattled off 7 consecutive years of at least 43% growth before proving mortal. 7 years. I'm going with a 7 here.
Let's move on to valuation, Rick. How well will Celsius Holdings stock do over the next 5 years? And how safe is it? 10's a sure thing, 1's a lottery ticket.
Yeah, so I went with 15% plus for the returns and a safety score of 5. The science of the Celsius beverage is thermogenesis. Its active ingredients safely raise a body temperature just enough to help you burn off more fat and calories ahead of cardio activity. Put another way, it heats up so you can improve your performance. Is Alani Nu thermogenesis for Celsius stock? Is it the key to heating up Celsius stock to improve its performance? We're going to find out in the next few quarters. Right now, Celsius is going through growing pains and trading for more than 30 times next year's projected earnings. My bullish case rests on these analyst targets being depressed. If I'm right, they're underestimating the synergies or what Fieldly and its team can do with booming property again. If it can catch lightning in a can again, Celsius is a lot cheaper than the masses think. Safety score, I just said a lot of wacky things here. I wouldn't trust myself either. I'm going with a 5.
Yeah, I think that's the one thing, Rick, you and I agree on, is that while not necessarily binary, leans towards more binary potential outcomes. I think this is a stock that I could see it, absolutely delivering the 15+% returns. I can see investors losing money from here too. If it depends on how things play out, largely with consumer consumption tastes and whether the things that they're doing prove to be larger markets than we expect. And we're just going through a pause in consumer taste right now before those brands really move more into the mainstream. I don't think they're necessarily going to move into the mainstream. I think that the target market where they're aiming their addressable market is probably smaller than some of these other big brands that have taken more share. And that's why I'm saying, again, same safety score, but my expectation for returns is probably the lower end of 5 to 10%. I don't think it's going to blow up, but I don't think it's necessarily built to be an outperformer.
Topic time. Rick, is there a company in Celsius' space you like better?
I'm going to stick with Celsius. So even if I'm wrong, Celsius and Alani, they were the third and fourth largest energy drink companies in the U.S. right now. This is like T-Mobile merging with Sprint, Red Bull and Monster, or AT&T and Verizon. The number 3 and number 4 brands are getting together, and either it succeeds or it gets bought out by PepsiCo or some other food and beverage giant. So I think it's going to win either way.
Yeah, I think there's something to what Rick just said there, the special situation where we see somebody that wants more share in this space that's not really in it now besides as a distributor decides to buy the business. I think that is definitely a possibility, but largely I'm just not compelled by this category. It's gotten relatively mature. Those big players, even they're not growing now. Like you said, they're losing share. And I think largely putting it in the kind of the too hard pile is probably a good idea for a lot of us out there. And well, I did Starbucks last episode, so I'm not going to float that one again.
Starbucks in the Coca-Cola episode. And yes, we planned the beverages to go together. Thank you to both Jason and to Rick. They've given Celsius an overall score of 6.2 out of 10, with Rick more bullish on returns, but mostly agreeing on the pros and cons and the riskiness. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is the Trade Desk. Till then, Fool on.
Yeah.
Raise your score, Rick.
Yeah. No, I'm not changing it. It is what it is. I just want to make sure that, we didn't have to, eat crow afterwards. But yeah, I am what I am.
Feed your hate.
Yeah.